Alrighty, there will be a doubleheader today because I did not get a chance to upload yesterday's recording, although that was recorded yesterday, so you should view that as a Monday thing. That was purely response to what we knew yesterday about First Republic Bank. Today we've got a bit of the fallout from the First Republic Bank seizure. Even though yesterday, stonks were great, everything was green, everyone was very happy. The Fed saved the day. Jamie Dimon said, the banking system's very sound. Well, today, reality started to set in a little bit. For one thing, a lot of people think that the Fed is going to hike rates tomorrow, which, honestly, there's a strong reason to believe that they still will. I thought last time that they weren't going to hike, and I was wrong about that. So I think that the Fed really is trying to look like they don't care. That's the Fed's attitude right now. They're trying to be aloof and be like, what crisis? Everything's going fine. And so if the Fed pauses tomorrow, I could see Powell making the case that internally that, if we pause tomorrow, well, then everyone will think that we're worried about, the regional banks, and we can't show that we're worried about the regional banks, so we got to hike again to 5.25%. I was wrong. I believe we're currently at 5, and tomorrow, if they hike, it'll be 5.25. So the biggest name right now that is being circulated as the next First Republic, the next Silicon Valley Bank, the next Credit Suisse is PacWest. And PacWest stock is down 27% today. It was off the lows, so I guess maybe Kramer, I'm sure that'll be the headline if you tune into Kramer at 6 o'clock tonight. He's going to go, hey, it was a rough day out there, but PacWest is off the lows, so that's bullish. So, everybody pile into PacWest, just like he told everybody to pile into First Republic after they, tried to prop it up a few weeks ago. It was only a few weeks ago that First Republic had $30 billion injected into it, and we were supposed to be told, they're going to be fine now. And then they went bankrupt anyway. Now PacWest is on its last leg. It's just the dominoes are falling. Do you think that every time that a bank collapses that depositors are less inclined to pull their money out of their own regional bank in a similar position, or do you think that they're more inclined to pull their money out? Me thinks that every time another bank collapses within a few weeks of each other, more people start to think, especially if they've got, high deposits that are well above the $250,000 insurance, level. They think to themselves, if I want to be a responsible bank customer, I should probably move my money to a bank that's more secure than PacWest, for example. Especially when you've got, JP Morgan Chase bragging about how safe and secure they are. They think, maybe my money would be safer guaranteed by Jamie Dimon rather than, whatever clown is running PacWest. And you notice it's all the West Coast banks that are going bankrupt right now, with the exception of Credit Suisse. These are banks that have a high exposure to West Coast commercial real estate. This is commercial real estate in areas that are rapidly being depopulated, where people are, not going back to the office. They went home because of the Wu flu, because they were all afraid, and they never came out of their houses. They all stayed in their houses. In fact, a lot of them are picking up and leaving California entirely, which is why San Francisco Bay Area real estate, residential real estate, commercial's way worse, I believe, but residential real estate is down something like 10% year over year. And so it is these West Coast banks that are getting hit the hardest, but they're not going to be the only ones if this continues. I mean, if all the West Coast banks go out of business, the shakiest looking banks will no longer be on the West Coast. The other banks will look worse. Every time that one really bad bank, really unsafe bank collapses, that just makes the next bank in front of them look that much less safe. Because, a couple months ago, if you were worried about your deposit, at PacWest, you would have been thinking, someone could have said, well, Silicon Valley Bank or Silvergate or First Republic, they're in way worse shape than PacWest, so you shouldn't be worried about your money at PacWest. Well, now those three banks are gone. They're donezo. So now PacWest is the dirtiest dirty shirt in the hamper. And so this is how it happens. Keep in mind that the Fed is not even cutting rates yet. When we have these big collapses, they begin in earnest after the Fed starts cutting rates. Now, you could argue maybe we're deep into the crisis and the Fed is just that delayed. Normally, the Fed starts cutting rates much sooner, and Powell is, being more stubborn about that. I guess you could make that argument. I don't know if that's the case, but empirically, at the very least, the real crash tends to come once the Fed capitulates. And you could say that once the Fed capitulates, psychologically, a lot of people then look at that as a sign of, oh my gosh, I need to get out of the pool. There's a shark in the water. You got to get back to dry land. And then they just start to sell and sell and sell. And when it comes to a bank, sell means pull your money out. Or more realistically, moving your money to a different bank, to a bigger bank, to a national bank, to a multinational bank. Not a regional bank that has a high exposure to the local economy. So the question now is, how many weeks before the next collapse? How long before PacWest? And I saw there was another one that had West in the name. Another West Coast bank. I can't remember the name of it now. That also is doing worse. And here's the thing. Regional banks across the board, not doing well today. The regional bank ETFs are down. There were like 3 of them that I checked. They're down between 5.5% and like 6.25%. And so, while PacWest is the worst performer of the day, regional banks all around the country, people are looking at sideways and thinking, could you be the next one to fall? And even if you're not the very next one to fall, they're looking at, okay, who's going to be next after PacWest? Or maybe after the next 5 banks, who's the 6th one in line? And they're selling, and they're selling. Banking crises, is that a correct way of saying that? Sounds bad, but I think that's correct English. Anyway, whatever the plural of a banking crisis is, they don't happen overnight. They happen slowly and then suddenly. And then it seems like overnight, oh my gosh, everything's falling apart. But in reality, things like this, bubble up under the surface for months before the real crash begins in earnest. And so if we enter into a recession sometime in the next 12 months, Joseph Robinette Biden, the 14th or whatever he is, may be running for re-election as, what will he be then, like 81? He'll be close to 82, I think, isn't his birthday in like January? Yeah, so he'll be 81, running for re-election. And we may be in the worst depression since the Great Depression. The 2008 depression, by the metrics, I would think that this depression is going to be worse. Asset prices, more overvalued than they were back then. So take from that what you will. Labor force participation rate, lower than it was before the 08 crash. Do you think that labor force participation rate is going to stay the same in a depression? No, it's going to go down. And what happened after the last crash was labor force participation dipped and never came back. And so we're probably going to see the same thing this time. Asset prices way more overvalued than they were back then. What's the stock market now? Like 170% to GDP? It's not as high as it was, a year or 2 ago. I think it got up to like 250%. I stopped counting at that point. Once we got over 200% market cap to GDP a couple years ago, I quit paying attention to it because it's just like, this is ridiculous. But we're still absurdly overvalued. Housing, I've talked about ad nauseum. Way more expensive than it was even back in 06. And so the bigger the bubble, the more violent the deflation. That's the logic, at least. Is it going to hold true in reality? Well, we'll see. So anyway, with that said, I will see you folks back here tomorrow.